Happy Friday, Eric Bibel with the Bible team at Neil Home Loans. Hope you all had a wonderful Labor Day weekend and back to reality, a short week. And here we are Friday again. And typically short weeks make for some excitement in the markets. Well, this week, unfortunately, the excitement was not the excitement we were looking for. As we closed last week leading into Labor Day, the 30-year fix was on a nice charge down, closing the week at 7.07%. We walk into Friday today, 30-year fix is unfortunately at 7.33%, a move in the wrong direction. And really the question arises, given the fact that there was no real market moving data released this week, why are mortgage rates higher? Why, with inflation being confirmed and acknowledged by the Federal Reserve that inflation has definitely pulled back, we've now seen confirmed data that the labor market is showing signs of weakness, and Wall Street is betting now with 93% confidence that the Fed will not raise rates later this month. Why are mortgage rates moving higher? And it comes to a level of uncertainty. Markets do not like uncertainty. As we know, forecasters over this cycle have been horribly wrong. For mortgage rates supposedly to be lower at this point, home values should have crashed, and our economy entering a recession, all has been proven wrong. Every forecast, unfortunately, has done the exact opposite. And it comes down to is the market is operating out of fear of the unknown. Until the Fed unequivocally says, one, we've won the war against inflation, and two, here's what's going to happen next. The unfortunate reality is we will continue to see volatility in mortgage interest rates. It's an unfortunate truth, but a truth that we have to acknowledge. For only when we acknowledge can we see progress forward. That progress forward, or the silver lining, is that transactions are still taking place. The consumer has come to terms that mortgage interest rates are at these levels. And with that, demand for housing still remains incredibly strong in almost every market throughout the United States. With that, sellers are still listing their homes, albeit, yes, they're at a lower pace than we've seen in years past. Inventory continues to come online week after week. It's our responsibility to take this message to the buyers and sellers and confirm that now is still a good time to buy and sell real estate. That is an unequivocal truth. We've seen home values continue their ascent up, and it looks like there is no stop in sight. There has never been a point in time in history where a client says, gosh, I wish I had waited another 6 months to buy. It's always been the exact opposite. I should have bought sooner. That message is what we need to continue to drive to our consumers. And yes, it is uncomfortable now. I do not want to deny that. Mortgage rates over 7% are not fun. But as I mentioned, transactions are still taking place. So it's our responsibility to ensure that our consumers, our clients, our buyers, our sellers are given the most appropriate advice and information in times such as this. If you need help conveying this information to your client base, we are here to support you. Additionally, I've included our monthly national housing survey in the link below. Please take 30 seconds to complete it. Valuable information there shared from multiple markets throughout the United States. I'll be sharing the results next week in our Friday update. But as always, we're here to support you. If there's anything we can help you with, do not hesitate to reach out. And as always, make it a phenomenal Friday and an even greater weekend. Thank you.